Sweet, perfect, awesome. Thanks for being here today, Joe. It's been a pleasure. So we actually kind of like met about what, a month ago, maybe a little bit more. So we did kind of I did get to hear your story a little bit in detail, but I wanted to then bring you on to just have a chat on here because I think it'd be great to get more people in the industry in terms of like the e-com side and even people in my network to find out more about yourself and what you're doing. So yeah, let's just get straight into it. So I think it'd be good for you to just give everyone like a brief intro into like who you are, what you do, and then we can get into like the value and nitty gritty side of things.
Yeah, amazing. Well, first and foremost, thanks so much for having me. Um, Pleasure to be here. So, quick introduction to myself. My name's Joseph Cox, or Joe. I'm a chartered accountant and I'm the founder and managing partner of Ecommerce Accountants.
Cool, awesome. So before we get into like the numbers and like I said, you're like you said you're a chartered accountant and mainly folks. So obviously your business is called e-commerce accountant, so you're quite like focused on the e-commerce side. And again, we'll get into you kind of like maybe branching out in more as we go in depth. But what made you start e-commerce accountants? Like, what's the story behind everything?
Yeah, so the name obviously is quite specific, right? It does really says what it does. Um, Before starting e-commerce accountant, so my sort of the backstory is that I was I was training as an accountant at a really small firm in London. And when I say small, there was like four people. And it was like a really traditional, yeah, like not too much, wasn't dynamic, not much was happening. And what's weird now looking back, so it's 2025, end of 2025 while we're recording, that was, 2010. And you just had like these big paper, everything was paper based, using YouTube even was just a bit unheard of. Essentially, while I was working there, I was training. I started an online business with my friends. And so we were doing Amazon private label and things went really, really well. And like I said, it was like really early doors. So the actual information you would get on how to sell on Amazon just didn't exist. So a friend of mine had paid like 3 grand to do this online course called Amazing Selling Machine. And quite a lot of my clients have also historically done it. And, that it's a really good course. I'd recommend it. Um, and yeah, things went really well. And essentially, I quit my job. Once I was fully qualified, I quit my job and focused on running the online business. Well, we had several businesses by that point with my friends. And then after a couple of years, I sort of found that instead of developing products and launching products and doing marketing, and I didn't train to do any of that, but it was quite fun, much more fun than doing bookkeeping. I ended up in this position where I was sort of doing all the finances for 5 companies and I wasn't really doing anything. I was just like, I'm just an accountant again. Now, what's happened? So I wanted to find an accountant that I could just pay to deal with it. And there weren't any accountants. So if you Googled e-commerce accountants or accountant for e-commerce, literally all the search results, there was no one there. Um, and I just thought that's weird. So I was like, who owns the domain e-commerce accountants? Because someone must own that or be squatting on it. And it
No.
was it was free, or it was available. So I bought it. Um, didn't think too much of it. Like I'm sure you might do the same. You just buy loads of websites sometimes when you think it's a good business idea. And anyway, fast forward a couple of years, and me and my business partners were sort of pulling in different directions. Um, I actually went backpacking and traveling, and they wanted to focus on running the business. So we sort of agreed, automate it all, do our separate thing, sort of. Um, yeah, and then before I knew it, like e-commerce accountants was basically just born out of that. Um,
Got you. And then, so what was there a specific moment like? So when you obviously you got the e-commerce accountant side. Was that the moment you kind of realized, okay, that I'm going to stick to ecom, and this is why they need accountants? What was it? What made you think at that point, okay, like I'm going to stick to ecom? Because you could have gone for any kind of like industry, you could have done it for any other ones.
yeah, good question. So um, the answer to it is there are a lot of intricacies. So especially for us, we were dealing with Amazon, and there was like this. There are a lot of bits of software now. A2X, Link My Books, Dex Commerce. We're building our own one, e-commerce fusion. And back then, none of those existed. And so that what you needed as an Amazon seller, like you have all this money coming in, but you needed access to the platforms and all these different reports to process the data. And there's no, like, Amazon don't tell you how to do that. If you're on Shopify, like Shopify don't tell you how to do that. So I figured it all out myself, and I had processes for how to do that efficiently.
Mm.
And so I kind of specialized in it just because I was solving a problem. And actually, what happened? So I kind of jumped ahead really of it because I realized I was rambling a bit. But when I went traveling, I kind of needed some income. So like we kind of sold the business. I'll skim over that. We sold the business. We took a lump sum out, and then I was traveling. And basically, although I was still working for my friends' businesses, and we had a couple of other little businesses, that was sort of paying pocket money while I was backpacking. So it was like paying for my Airbnbs and that sort of thing. But then other friends started e-commerce businesses and started paying, like, basically. So it sort of grew naturally.
Yeah.
And then there was I kind of thought, oh, I'm going to give this a go. And so again, if you searched e-commerce accountants or accountant for Amazon sellers or something like that, the first actual result was an Amazon forum post that wasn't ever answered. Someone saying like, I'm looking for an accountant that specializes in Amazon. Can you help? So then I kind of, this is actually when I got back from traveling. I was like, I just answered this. I was like, hi, I'm Joe. I'm an accountant. Da, 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 da. Here's my details. And like literally the phone sort of started ringing that week. And then slowly, like, the website ranked and outranked that post. But yeah, that was almost like a guerrilla marketing tactic. I sort of got to the front of page one by answering that question. And a lot of the clients then had the same issue. You know, they'd speak with an accountant who'd just go, I don't know, like what reports do I need? You the business owner, give me the reports. Whereas I found when I was, when I started, and how we still operate now is, if you're our client, we tell you what we need. We'll tell you how to get the report. We'll write an SOP that says, click here, give us that. Give us secondary user permission so that we can do it for you.
Okay, interesting. Good. And how long ago was that when you started it? I don't think you mentioned it.
So it sort of started properly in about 2016.
Right. Okay. Cool. Yeah. So it's going on 10 years.
Yeah, yeah,
Okay.
yeah.
Cool. So, I mean, 10 years is a long time. Obviously during that period, you've had the whole like TikTok coming up and TikTok Shop, and I imagine that's probably something that you're having to deal with a few brands as well. How has the accounting game changed for ecom brands over the last few years?
Massively. It's kind of gone in 3 phases so far. So the first main phase was Amazon. And again, it's so weird to try and give people this context, but like Shopify wasn't a big thing back then. Like if you were in 2016, 2018, it really, you still had people building websites on like Wix and stuff. Or especially e-commerce ones, WooCommerce and things like that. Around 2020, so you had the pandemic, right? So e-commerce really took off. Like we were sort of doubling every year, but that was like a big doubling. And that was also the year that we started, 2021, when we started getting lots of competition, because I think so many other accountants were suddenly sat at home without anything to do. And then we're like, what's the only industry that's still here? But it was around that point, I think, drop shipping had been around. I'd been seeing it quite a lot since 2018, but 2020, 2021, when everyone was sat at home, and I think Shopify made it so easy, loads of people started transitioning from Amazon, or at least more businesses from Shopify just started appearing. And then that kind of carried on until about 2023. In Shopify, I suppose percentage wise, we'd say have like 90% of our clients were on Amazon. And then that's slowly shrunk. It's still a big one. It's probably still like 60% will have an Amazon store, but then you've then gone from like 5% clients on Shopify to now probably 70% of them, 80% of them are on Shopify. They might also be on Amazon, but and then now TikTok is that sort of the third phase, I would say, where it's really starting to grow. And about 2-3 years ago, the first few clients, like some of which were existing clients, started just doing TikTok, and you just saw their sales like skyrocket. And I'd be having conversations like, like, what's gone on in the last year? And they're just like, no, we're just doing this TikTok thing and it's going nuts. Um, yeah, does that answer the question? Sorry.
No, it's fine. It's just kind of like how it's changed in terms of like the last few years, and that kind of makes sense. But it's interesting to hear you kind of think Shopify's always been around when you're in the industry, because I've obviously been running my agency since 2019, which is the beginning of 2019. You're just like a little bit more ahead of me, so you got to see the pre Shopify era, which is great. Cool. Jump into a little bit more of like the value side, because I imagine there's a few people that may be listening to this that want to get more of the underlying value. But yeah, what would you say? And the questions I'm going to be asking, because I own a few ecom stores as well, unfortunately, but not going as great as envisioned, which is obviously why I bought them. But what would you say is the number one financial mistake you see e-commerce founders make that kind of like kills the margin or growth and stuff like that once they wherever they're at whatever stage they're at?
So this is going to sound really silly to some people, but it's that they don't. Most business owners don't seem to actually look at their products and like make sure they're making a profit before selling them. So they might kind of, and I suppose as part of that, they won't think about VAT in particular. So, VAT, if you sold something for £12, £2 of that is going to be VAT. So it's 1/6 of your margin. Um, if your margin isn't positive, if you aren't making a profit on every unit, every single time you sell it and you advertise to make a sale, you're going to increase your losses, right? So there's a thing known as contribution margin. So if you take the selling price minus all of the direct costs that go into making and producing and selling that product, if that's negative, your losses get bigger. And I've seen people, they take loans or they'll chuck in. They might have a full-time job, so they might put in something like 25 grand, start launching a product, and they're more interested in getting sales up, doing advertising. They sort of convince themselves that all they need to do is hit this sort of critical mass and it'll be fine. And actually all they do is they like amplify losses.
Yeah. Got you.
Which I get it. Like you get that dopamine feeling every time you make a sale. It feels good. Like it's the sort of thing that people really measure. And you'll see it on YouTube everywhere. People be like, "Oh, I've made X 100,000 or million in revenue." It's very easy to show a graph of revenue, but if you're not making profit, you're just
Yeah.
so.
I think it's the same thing even in like the agency space, where a lot of agency owners post, their revenue and like this is what we're making seven figures and stuff. But then when you look at the underlying profit margins that they have, they're on like a 15% profit margin. Yeah. Okay. Interesting. What would you say is a? I know I think this might be quite like a broad question. I know you make me like hard to answer, but what would you say is kind of like the minimum kind of like profit margin that an e-commerce store should be having? As- Bearing in mind, obviously, that there's like advertising costs and VAT and all of this type of stuff.
It's tough to say what they should have because obviously
Yeah.
the higher the better. In general, the sort of best that we see overall are like 30%, but that's like the top 1.5%. Like it's very rare to actually get those sort of margins, and we're talking that is after ads and cost of
Got
goods.
it. Yeah.
So the sort of elite level, I would say. So we've got two massive clients that are like 15, 20 million revenue, and they consistently will have, so say each month, say they're doing 1 million in revenue, they'll have 30% of that will be COGS. 30% of that is usually advertising, and then the rest is profit.
Mm-hmm.
Like, and those guys, both of them are insane. When you look at most other businesses, I would say 20% is still good. That 20% after all of those things. But 5 to 15 is the sort of normal level, depending on then how aggressively you're sort of chasing that top level.
Yeah, that makes sense. Cool. A lot of like brand owners say when they look at their kind of like even during like a November December period, they just want to get crazy sales and kind of thinking that they're going to end up profitable. For someone like a brand owner who runs a business and they don't look at their finances and stuff like that, what would your advice be on kind of like managing cash flow, and what would be the first step into them looking into their, their P&L, and what they should be looking at and stuff like that?
Speak with your accountant.
Yeah.
That's really what the accountant should be doing. And it's sort of tough though, because then when you're on the accounting side, right, it's then what level of service are you giving and what level of service is the client paying for? Because if you are just paying someone to do your VAT returns and your tax, like corporation tax, like in all honesty, the accountant then isn't really in the position to give you that advice. So, and it's a bit unfair. We get it from all of the inquiries that come in, right? People will give you this sort of list of this wish list of what they want, and then they say, "Oh, if I want that for £50 a month," and you're like, they can't just be delivered. But in general, have the conversation with your accountant, and then I don't know, try and, depending on your relationship with them, but you could be like, "Look, I understand that giving advice on this is outside scope. Like, is this something you can do and you could help me with?" And they might then open up and and try and support you with it.
Got you. Okay, cool. I think something else that most because I think owning a Shopify store, there's so much to it, from fulfillment to inventory to cogs and shipping and everything. But I think one of the most interesting conversations that I'm having with most or a few of our clients right now is inventory. Um, in terms of like inventory accounting, is that something you guys kind of look into as well? Can you break down how inventory affects profit and how you can kind of stay on top of it, and how you guys would do the inventory side?
So it's definitely the toughest piece of the sort of financial puzzle. And honestly, there's not actually a piece of software yet that has cracked it. So there's tons of inventory bits of software. I'm yet to find one that I would then wholeheartedly recommend. What we usually find as well is all businesses are different, right? Like if you're drop shipping, your inventory is a bit easier to calculate than someone who's like buying loads of raw materials and making them into a finished product. So it honestly depends. It's a bit of a cop out of an answer, but it really depends on the business owner. When I run my businesses myself, I did it all on a spreadsheet, and again, it depends on the platforms you're on, because they'll all have different reports. Depends on how complex all of your goods are. In general, though, I would say don't drive yourself crazy on trying to get that bit perfect, because it's almost impossible to get it perfect because there's so many moving parts. There's in general, you should include the cost of the actual materials, the cost of the shipping, the cost of the importing the goods, and then potentially the cost of fulfilling that to your customers, and packaging. I'd come in for mention that. And then all of those things, there might be like FX transactions in there, because you might be buying your packaging from one country and your shipping provider is a different, so it is difficult, and there's always going to be differences. So what I would say is, in general, my advice would be, as the business owner, use a spreadsheet, get a ballpark figure, maybe even round it up slightly, just so you know that you're not accidentally making a loss when you're making a profit, and then use that. And that's that's almost the best approach, because otherwise you're just going to spend so much time on it and so much stress. In terms of, is that something we help with? It's kind of not, because we're almost like an outsourced company finance team, right? So you guys, like a client will get in touch with us and we deal with stuff and make sure that all the finances are correct. For us to know, unless we were working with you on a really, really close basis, and like, to be frank, that would be like really expensive, and so it wouldn't really be as part of our business model. But we would need to know every single SKU. So when you're buying something from a certain supplier, we need to know which SKU that would be linked to. If you're buying packaging, which SKUs that linked to. If you're doing a shipment and you're filling up a cargo container and it's got multiple SKUs in it and multiple units, like it becomes quite a big process. So I've not found a way to scale that as a service provider, because that's more of our position in the market, in that we were almost stack them high, sell them cheap. Whereas I suppose if I was only working with dozens of clients rather than hundreds, then it'd be easier to implement a system.
That makes sense. Got you. So in terms of like what you guys do from the ecom from the accountant perspective, do you guys give like if you were to have a client come in to you guys right now and they were to give you all of like their data and financials and stuff, would you take it away and then be like, I recommend this, or like you're spending too much on this, or would it just be like this is your P&L? Like how what does it look like at the end of the month when you're doing the reviews if you do one type of thing?
Yeah, so we've got two sort of service levels. So we've got compliance, which is the sort of bare minimum a business needs to be compliant. So filing all your taxes and meeting all the filing deadlines. And then compliance plus, which is then a bit more that like sitting, talking with the business owner, reviewing stuff, usually quarterly. Although if a client then wants more, we would do it monthly. Um, and then, so as part of the compliance plus service, that's when we would look at things and say, like, essentially, this is how much tax you should be setting aside on a regular basis. This is how much profit you've made. Let's look at your systems. I suppose it's not a silver bullet because you're still the business owner, but we would be sort of asking the questions and telling you how it looks on our side. And then it's a bit more of a collaborative sort of approach to your business. And it kind of, we usually sort of start it almost from scratch. So the very first, we call them business reviews. So the very first business review would be your client manager sort of showing you how it is initially. And then, if you come with problems or from your side, we can then sort of work with you to build it out.
Cool. That leads to my next question. In terms of like having an ideal, you guys having an ideal client, what does that kind of look like? What would you want someone to come with when being prepared from a preparation standpoint? Or like, do you need it? Would it be good for them to have everything on like sheets or using something like QuickBooks or Zero? Like, what's the best way for them to come in and work with you, type of thing?
So we, as I mentioned earlier, the way I approach things, we very much say, do it like this rather than you tell us how to do it. So we're very particular about how we do things. And that's not to say that our way is the best way. It's just I've found that having one single process makes things efficient for me and my team. And then it also means that you as the business owner don't need to think about it and you can focus on running your business and growing it and making more money. To answer your question, we use Zero. So we're Zero Platinum partners. We've got that little bit of wood up there. We won an award with them last year for being the innovative firm of the year.
Nice.
It's like a nationally recognised award, which if you are an accountant, is quite a good thing. Everyone else just thinks, oh, what's this bit of wood? So we use Zero, and what I would say is you don't need to have that all ready before working with us. Like, our actual ideal client is probably either someone who's just getting started but just wants to make sure they're doing things properly, or someone who's like in their first year or second year of trading that hasn't set up anything yet and who just wants us to kind of deal with it all. We much prefer working with clients on the smaller end so that we can grow with you than if you were like 10 million plus. Although, yes, we could bill more and like it would be a good client to have. Actually, there's usually so much work and so many moving parts. It's quite stressful to have to deal with. Whereas if you're a new business, we can just say, look, do this, do this, do this. Go and focus on running your business. You don't even need to have everything on spreadsheets in advance. Like we'll just tell you what we need and we just get it sorted. In terms of the other things we use, so we use, like I said, Zero. We connect all your bank accounts to that, so all the data flows in automatically. Whatever platforms you're on, we'll have a process or a bit of software that we use for it, so we get secondary user access and deal with that ourselves. And then there's another software that we use called Apron, which is for all your expense invoices. So whenever you make a purchase, you forward it to your Apron account, which you can do either via email or like an upload. Or WhatsApp if it's like a physical receipt you've got. And then it goes through to your bookkeeper. Your bookkeeper looks at it, pushes it into Zero, and then we sort of work in the background.
Okay, interesting, cool. And then you obviously just mentioned you rather work with like the well, not rather, but like the ICP side of things is the smaller brand because it just makes it easy for you guys. As a brand going from example like 500K to 5 million a year, what would you say, what would you recommend be the biggest like finance and accounting systems that need to evolve with the business itself?
Yeah, and that's the exact sort of level where stuff does become a mess. So I would say below a million is definitely easier to pick up because usually, again, you might be in your second year of trading at that point. 5 million, you're probably like 3 to 5 years in. So for us as an accountant picking it up, there's probably historical systems, there's possible mistakes, there's like reverse engineering what you, the business owner, have done, what the previous accountant's done. It can, like, we deal with it, and don't get me wrong, it's not, we wouldn't say no.
Yeah, of
It's
course.
just a bit more
Yeah.
complex. Mm. And there's more stress on the client side because you're busy, you've got stuff going on, and you don't want to be looking at finances, right? And you don't want an accountant asking you like, "Oh, what's this thing for? How did you do this?" You're like, I'm trying to do an ad campaign. Like,
Yeah.
I'm paying you to sort it out. Deal with it. Um, Sorry, what was the actual question? I started. What's the
What like so? What was the biggest kind of systems that you would need to implement as you evolve? Whether it be like more integrations or more systems, or it's just kind of like yeah,
it's usually the system for us doesn't change. So we still use zero. Um, it's it's more getting the client in the mindset of every time I make a purchase, like, or getting them in the process of every time I make a purchase, send it to Apron. If I make a purchase on my personal account, keep a record of it. But really, don't make purchases on your personal account because that creates headache for you and your accountant. So if you've got a client who is doing that all the time and they've got a £5 million business, they're going to be doing it way more with like bigger transactions. That stuff goes missing. So if you get, so that's why I say I prefer like smaller businesses because you can sort of work together and build a process. And it sounds kind of bad, but like train the client to do things in a more professional way earlier. So as they grow, you don't have all these issues. Whereas if you're picking up a business that's 5 million plus, and then they've had an accountant that hasn't really, I don't know, that sometimes some firms just chase their tail and aren't, and they also don't feel they don't like telling the client like this is how you should do it because they it kind of it might, some people might not like it, but I do think our clients value it, and that's what they're paying for, right? Like you want to be told how to make your business professional, the other way around.
yeah, agreed. Yeah, I'm big on teaching clients because yeah, you have and I think when it comes to that like RICP, I don't like working with brands that think that they with brand owners that think they know it all. And you
Yeah,
get a lot of them. Even like you're hiring me to. Well, this is just me speaking from personal experience. You're hiring us to be your marketing team, and then when we get hired and we come in, you then start telling us what to do, and it just becomes a headache. And then yeah, so I completely agree with what you're saying, which is great. Cool. What would you say? This is more of a personal question because I would say I'm great at marketing. I'm great at hiring, acquisition, all of that type of stuff. But finances for me has always been my biggest downfall, whether it be personal or business side of things. From you working with obviously hundreds of founders and like within your business, what would you say? What's the one thing you wish people understood early about managing money? And it doesn't have to be business focused. It could just be like on a personal level. What would you say would be that one thing?
I would say, and actually, this is something I've had. I'm almost a bad accountant to myself, right? Like
Yeah.
I do such a good. Oh, sorry, I don't want to big myself up too much. My team do a great job with our clients, right? When we do your tax return. We'll tell you how much you got to pay and when. We chase you to make sure deadlines aren't missed. Personally, I don't chase myself and I forget, and then I'm late, and I have to pay loads of penalties. It's like do as I say, not as I do. And this, so where I'm getting with this is recently I've then instructed one of my client managers to client manage me. I
Okay,
was like,
interesting.
treat me like a client. Let's do a business review. So we do it once a month. Let's look at, and Anish on my team, he's senior accountant. He's been doing this for years. And I honestly find it so beneficial, even as an accountant. So he'll sit down and just like, Joe, this is the sort of profit, talk about some places we're spending money or whatnot. But then the biggest benefit actually is saying, like, this is the profit. This is roughly how much you should be setting aside for tax, whether it's corporation tax, VAT, personal tax. You've drawn this much from the business. And equally, like, this is how much cash the business has at the moment. Yes, you can afford, like, you've got enough aside, or you might want to move, like, not take so much money, that sort of thing. And it's almost like a peace of mind, being like, oh, yes, I have got enough set aside for my personal tax bill. So I suppose going back to the question, one thing that I see people do usually when they're a bit more early in their entrepreneurial days is when money comes in, they just get a bit excited because, like, a big lump sum comes in, whether it's from Shopify or Amazon, and they start spending it, and they don't really think about how much should I be setting aside for various taxes, because it's kind of boring. But the tax man is one person that will chase you for outstanding money, and it has to be paid. So I'd say the ideal thing is don't keep just taking money out willy-nilly. I'd say set an amount, look at it with your accountant. How much can you take out? How much can you afford to take out? And take out that once a month, and then, sort of live within your means. Don't constantly, like, take £50, 20 quid out from the business, because you just end up in a bad position. Like, I suppose the condensed way of answering that question is treat your business and your personal finances separately.
Yeah. 100%. Cool. Awesome. Let's look at the other side of the spectrum, because I imagine hopefully there's a few people that are really in the trenches and they're kind of fed up with dealing with their Shopify side. If we're talking about, like, exits and stuff, I don't know if you've had experience with any exits, any exit readiness and stuff like that. What do you look for when cleaning up books and preparing kind of like brands for the due diligence that needs to happen for an exit?
In terms of what we look for, I wouldn't say we look for anything ourselves, but in terms of preparing a client for it, you kind of need to think of what's the buyer looking for. And so if the question is what do buyers look for, it's there are a few things. One, everything needs to be squeaky clean and accounted for. So you need to make sure that when they ask questions, and it happens, right? Like the due diligence process, the other side, they're going to have lawyers, they'll probably have their own accountants. They're going to choose a piece of, like, a date in time. So, we're in November now. So let's say you're selling it. They're going to say, hey, 31st of October, your balance sheet says this, like, can you prove it? Says you got this much in the bank, says you got this much inventory. So you sort of need to make sure that all the numbers are completely correct and have supporting documentation, because what you don't want to do is, so now it's the 4th of November, what you don't want to do is then say, yeah, we'll get back to you, and then get back to them in 4th of December, because then they're going to say, well, I need that for November now, and it slows the process down. They're not going to trust you if you're sort of taking ages. And the other thing is inventory, and making sure that your cost of goods is there, and they're going to want to calculate that and make sure that you are making a profit every single month, or at least your figures are what they say they are every single month. Because if they're buying you and you're loss making, they at least want to know that the losses are what they see. And it's a long process. Like, you really need to start thinking about it 2 years before you sell your business if you want to sell it successfully, like as a big exit, rather than a rushed sort of last minute thing. Like, you can get the deals done in 3 to 6 months, but if you're thinking about it 2 years before you sell, then you're kind of constantly building your business to be in that position. And it is best practice. So if you're making sure that your management information is, like, squeaky clean every month, then you can make the best decisions. And then it's sort of, when it comes to selling, it might only take 3 months to sell because you've been doing it for 2 years. And the reason I say 2 years is that usually a buyer wants to see historically, month by month, how the sales have been for the last 24 months. At least that's what we've seen.
Well, hopefully one day I get to that point with the friends that I've got. Cool. In terms of AI tools and integrations and automations, I don't know how much you've been asked about this by your clients in terms of AI side, or even what you're seeing happen with artificial intelligence. What do you think is the future of accounting when it comes to like the next 3 to 5 years, or what's your perspective and the shift and stuff like that with AI tools coming in?
I'm quite, I think we sort of had a chat about this before. I'm currently quite negative about it, but more as a grumpy old man, I'd say. Like as these tools have gone into everyone's hands, as an accountant, it's not that I'm scared for my job, but I do find that a lot of my clients use it when emailing me, which you can kind of tell. And it just wastes a load of time because it feels like the client will send you an email that has a load of substance. It has a load of words in it, but there's no substance. So it feels like they know what they're talking about, but sometimes they don't. And it asks that I don't like. However, I do think that it will, if it works the way people sort of are predicting it will, it should make things faster. So we should be able to automate much more. You would hope that we can get, so the issues that we're getting with, like we spoke about earlier with inventory, you'd like to think that you can kind of train the AI tool that if you then said, well, look, this is invoices from this supplier with this, description of this SKU. You just throw in the invoice and just say, like, calculate my COGS on an ongoing basis. I want to know what the average cost is. I'm just going to keep feeding you invoices. Like, here's a shipping invoice. If you can't tell which SKUs it relates to, ask me. That sort of thing. So I'm quite positive there. But in terms of communication, marketing emails, the amount of like LinkedIn AI bots, like I got bombarded anyway with like my details must be everywhere. I'll probably do things like this and say my email and then that's it. There's gonna be like 50 other bots. So I don't like that part of it. But out of interest, how do you? Sorry to turn it on you here, but how do you see it go?
Um, See, I'm optimistic with AI and then the way things are going. So there's certain, and this is me not talking about just like the marketing side, but I think the AI, there's certain jobs that it will just completely take over, and people will lose their jobs, as we've obviously seen already with even with like Tesla and Google getting rid of so many people. But I think on a selfish note, as business owners, if we are able to use AI to our advantage, we'll be able to get ahead quite quicker than we usually would have in terms of like previous years. So I'm pro AI in terms of like tools and systems and stuff, and just kind of being ahead in the competition. Um, in terms of like the way we're using it from a marketing perspective, I think one of the things that I've loved about AI is the 10x output that we've had from a creative standpoint. So we never used to create content, for example, for our brands, or we used to just run ads about 2 3 years ago, and then we started implementing it because we've seen how important it is for it to have that like North Star approach when it comes to marketing. Um, and it's allowed me to basically not need to have a team of like 12 people where like you have a full team of like content editors and stuff like that. We've condensed down the team, but we've 10x the output in terms of what we're doing because of the speed and delivery that we can get the AI going. So I think that's what I think from a marketing perspective and the niche that I'm in, great. I know there's some niches that aren't going to benefit from it, and I think the best part about AI I think that we're going to be seeing just like manual labor become quite necessary because AI isn't going to do that just yet anyway. Electricians and builders and stuff like that, they're going to be able to charge a lot of money in the future in the next like 2 to 3 years, and then it's all a cycle anyway. So yeah, that's kind of like my thoughts on AI, which is yeah. Last question: what would you, if you were to give? Because I'm big on kind of like upfront value, and then usually what happens is you tell people exactly what to do, and then only like 10% of the people are actually going to go away and do it. What would you say like if you were to give three quick wins for an e-commerce brand owner that's listening that they can go away and implement this week to kind of maybe save more money or run more efficiently? What would kind of like those quick wins be that they could do?
Very tough, that isn't it? Without knowing the,
It
I
could
mean,
just be
in
one.
general, in general, for most business owners, it would be if you haven't got one, get an accountant and automate as much of that as possible. Being an accountant isn't it's not rocket science, right? Like I'm not the smartest person ever, but as a business owner, it's not, in some ways, the compliance side especially isn't value adding. We're doing a job that has to be done. So although a business owner, can categorize expenses if they want, they can spend time to figure out VAT and how to plug in these sort of systems. Doing all of that doesn't actually grow your top line, doesn't grow your profit, doesn't grow your sales. It just reduces your expenses. Unless you're just getting started and really, really, really trying to save money, like getting someone to just like outsourcing it basically and getting someone else to deal with it for you, I would say you should definitely do that. And then look to get them to automate as much as possible. Then the next thing I would say is, if you haven't already, review all of your SKUs and make sure that you are actually selling them profitably and that there's a big enough margin there when you are selling them to absorb, marketing expenses and, everything else. And then probably the third one, again, less exciting, but actually like sit down and write out your cash flow. So whether you have an accountant or not, it doesn't have to use any fancy software, but literally make a spreadsheet, plan the next 12 weeks or 6 months in terms of what you're expecting, even if it's modest. Don't say, I'm expecting to 10x it, like, that might take 5 years, but like be sensible. Just be like, look, if things stayed the same or went 10% worse, how would my business look? Obviously you don't want it to be like that, but if you can plan for that, then, and you've got the finances and everything in place, then if you're doing better than that, you can react positively rather than the other way around.
Yeah, and I think just to add on to that, what we kind of tell our clients as well is be realistic as well, and look at the previous years, and seasonality is a big thing when it comes to e-commerce. So you might think, yeah, we're scaling and it's November, December, January, but then February, March might usually be a bit slower side for, especially for some brands. So yeah, be realistic with it. I would say. Okay, cool, awesome.
Yeah,
Yeah,
I mean, probably if someone's looking now to plan to scale for Black Friday, Cyber Monday, they're too late, right? Like you need to be planning that
yeah,
in June, July, really. But
yeah. Okay, perfect. But yeah, Joe, I appreciate it. It's been really, really interesting in terms of like the story that you have and just the questions and the feedback, and which is great. So yeah, thank you very much. And I'm gonna stop this. One
you're
sec.
welcome.